Hello, and welcome to another episode of the Markets at a Glance series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top events that are currently happening in the markets, with a focus on two data points that are very important and coming up later in the day, that is during the New York session. So one of the events will be the JOLTS job openings report, and the second one will be the Conference Board Consumer Confidence Survey. So once we go through these two, hopefully everyone will be able to trade from an informed perspective. So once you join in, kindly say hi on the live comment section, and these will confirm that everything is working just fine. So let's get on with it. Let's jump straight to the economic calendar. So this is the Forex Factory economic calendar, and as you can see, today being Tuesday, the 30th of July, we haven't had much of data points that are big or impactful in the markets. So one of the key highlight data points was the CPI and GDP data from the Eurozone. Of course, we had the German CPI. Somehow I don't have the data updated yet. So I'll try and refresh my calendar again. So then we had GDP for various European countries, including Spain, Italy, as well as Germany. So yes, it was mixed data. For instance, you can see the GDP for Spain was up 0.8%, for Italy 0.2%, for the entire Eurozone down 0.1%. So a lot of mixed data was happening. And now as we head into the New York session, there's quite a number of data points. Of course, the most recently released data point is the Case-Shiller Composite 20 Housing Price Index, which came in at 6.8%, a slight drop from the previous reading of 7.3%, but also still significantly higher than the projected number, which was 6.5%. So housing price index month over month was didn't have much of a change in the last 1 month. So remained the same with a 0.0% change, despite having a 0.3% increase in the prior month. So now the focus for the rest of the day will be on the Conference Board Consumer Confidence Survey and the JOLTS job openings. So let's put some attention on the JOLTS job openings, which is a key indicator in the job market. So it basically measures the number of job advertisements that were reported in the previous month. So as you can see, according to data that was released in the previous month, we had 8.14 million jobs being advertised, and now we're expecting this number to drop to 8.02. So while this may not seem like much of a change, there is a key underlying trend that has been happening, and if you follow the overall trend, then you'd understand what has been happening with job openings in America. So if I remove the forecast, this has been the outcome of data for the various months. And as you can see, since the peak that we saw about 11.5 million job openings in May 2022, that number has only been dropping over time. So why did we have this record number of job openings? So on one side, nobody was hiring during the peak of COVID. So if you look at the May, June 2020, a lot of companies were not hiring because there were lockdowns. So these lockdowns affected a lot of companies, but as things started to streamline, companies started rehiring, and this led to an increase in number of job openings, which kept on going up until it peaked here. So since May 2022, this data point has only been moving downwards, and now we are below a key trend. So what do I mean by this? So if you look at the past 10 years, and you look at the overall direction for the number of new jobs being advertised in the US, you'll notice this is from 2010, so it's 14 years. The path has been following this line here. So we would be expecting to be at least somewhere around here at this moment. However, the number we are seeing is much lower, and this is a red flag for the US job market. Remember, for an economy that is growing and making a strong recovery, like the recovery we saw after 2007 to 2008, so around 2010, this is when we started seeing a number of new job advertisements going up. So if you go back to 2007 to 2008, this is when we had the lowest number of new jobs created due to the economic crash that happened during that period. So since then, this has been just good growth. Then COVID, a very strong recovery, and now the trend has been shifting downwards. So whenever you see the trend shifting downwards, it's usually a red flag. It happened in 2007. So from 2007, from a bullish momentum, now moving downwards. So then in 2020, and now we are seeing this happening again. So it's a bad red flag because it tends to predict a recession period. And the Fed is closely watching this data point. So what does it mean if the number of new job openings are going down? So one, it means that companies are not looking to expand their production. So when companies are expanding their production and they are planning to produce more, then they advertise more jobs for their factories, transport, services, and so on. So in that case, it sends a leading signal to the Fed that this is the direction that the economy is taking. So in that case, you might expect that if the number of new job openings is going down, then the Fed will be concerned about one key mandate that they hold, which is to make sure that the US has full employment. So now that we are not expecting to see full employment in the near future in the US, with unemployment rates jumping to 4.1% as per the previous reading, now we might see the Fed being hasty in cutting interest rates. So cutting interest rates is basically negative for the dollar. So we have been seeing the dollar index weakening over time. And if the JOLTS job openings come lower than expected, then in that case, it should be negative for the dollar. So on the other hand, there is the surprise data that we saw last week with US GDP coming in stronger than expected. So strong GDP is a historical data. It's a lagging indicator, but then it might also indicate that the US economy could be creating more jobs. So in this case, we could be seeing an increase in JOLTS job openings as well. So if there's an increase in JOLTS job openings, it means that the economy is now creating more jobs. And as a result of that, the Fed could sit on its hands a little bit longer, waiting to see what happens with inflation, which is a data point that has not hit the Fed's target of 2%. So in this case, it's a very simple binary decision. If we see lower JOLTS job openings, then it should imply a weaker dollar. And the opposite is also true. So higher job openings might necessitate or lead to a stronger dollar. So as we mentioned, the market is not waiting until the Fed eventually cuts interest rates to start shorting the dollar. The practice has already started happening, and we have been seeing it happening time and time again. So remember, this is also the NFP week and also the FOMC week. So if you go back to the economic calendar and you scroll further downwards, then you know that there are major decisions coming in later in the week. So for the US specifically, we'll be getting the Federal Market Committee press conference at 9:30 p.m. on Wednesday. So there's an overall expectation that the Fed will not be changing interest rates. So of importance will be the focus on the press conference and what the Fed Chair Jerome Powell says during that event. So then on Friday, we get the non-farm payrolls, where also there is an expectation that the US created less number of jobs compared to the previous month. In this case, we're expecting 177K versus the previous reading of 206K. So if you look at the trend, it's also not looking good. So here we try and filter the 2020 data out, which was an extreme. And now you can see that the number of new jobs created in the private sector in the US has had a general trend of moving downwards. So when the job market is doing this badly, the Fed may have to cut interest rates in order to stimulate economic growth and creation of jobs. So with that in mind, then we basically know how to react to the data we're expecting later this afternoon. So besides this, there's also the Consumer Confidence Survey, which is basically a survey that tries to establish what people are thinking about the economy at large. So if personally, the government came to you with a survey and they want to know what you think about the economy, your response would be majorly based on your personal economy. So if you have a business, it's doing well. If you have an income, it's doing well. If you are employed somewhere, you're even getting raises, then in that case, your response will generally be positive about the confidence in the economy. So these surveys tend to tell you more about the consumer purchasing power than the economy itself. So in this case, the consumer confidence survey basically tells the government whether people are more willing to spend or whether they are less willing to spend. So looking at the previous data, you will notice that in the last reading, there was 104, which is an index value. But overall, let's say from February, from 106, we have generally trended downwards. We got to 100.4, and now we could be moving to 99.7, meaning that Americans are losing confidence in the performance of the economy over time because their purchasing power is also reducing as a result of higher mortgages, higher interest rates, and higher consumer prices as a result of the accumulated inflation over the last 4 years. So in this case, if we see consumer confidence going down, then that should be a signal for the Fed to cut interest rates early. In this case, it should be negative for the dollar. So on the other hand, an increase in consumer confidence should be positive for the USD. So that being mentioned, if you have already joined, whether you're watching this from YouTube or from X, kindly leave a comment, like and share this video, and I will appreciate this contribution from you guys. So hello, Googie Moses. I can see Samuel in the house. Thank you for joining. Hello, Gideon. Thank you for joining in today. Wangari Patrick, thank you for joining. Joshua Koech is in the house. Hello and hi to you back. So let's get to the favorite part of the presentation where we do some charts analysis, try to understand the current market structures and where the markets might be headed next. So hello, Roy from X. Thank you for joining. So on this next part, we'll be looking at a couple of charts on the MetaTrader 5 trading application. So also, it's important to share a disclaimer that this session is not investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So I'll be starting with the familiar asset that we use as an anchor, and this is the dollar, mainly because a majority of all currencies around the world are basically priced in the dollar as the base asset. So in this case, we saw the dollar trading sideways, and this was last week before it exploded higher yesterday and managed to close at a high. And today we have seen the continuation of this momentum as the dollar index recovers against other currencies. So this is quite a good trajectory. And knowing that the dollar is currently pretty strong today, we can also see it in the major currency pairs, where in the Euro USD pair, there has been a significant drop in the last 2 hours, indicating how the dominant dollar is basically moving markets. So clearly, for Euro USD, it's basically touching a major support area here. So in this case, we are basically seeing the market being at very interesting price levels. So whenever you see major currency pair trading at a major support area, then you know it's highly likely that you might capture a good position onto the next support or resistance level. So the key thing is to know which direction you are taking. So in this case, as we have already analyzed, we know that at 5 p.m. we'll be having the JOLTS job openings data. So the likely price levels at the market now turned resistance, which now we can work with the high. Happen to see a weak dollar. As a result, we'll be seeing the market recovering and going back to the previous high onwards. And a strong dollar could potentially push on this market all the way down to the previous high here. And this is around 1.07693. So this is also a potential movement depending on the outcome of the JOLTS job openings later in the day. So we also have the dollar trading against the Swiss franc, which has maintained this bearish momentum. So we have a technical price action level. So I'll try and remove these trend lines that are forming a very pattern. It gets to this, it finds resistance and eventually moves further downwards. And we could be seeing this happening or playing out later. And this is the high that we saw on. The data comes up very strong market, which is highly unlikely dropping or sorry guys, I don't know what happened. Got disconnected for a while, but now I'm back. So I believe the asset I was discussing was the Australian dollar against US dollar. So clearly it's a market moving on a sideways momentum. So potentially making a break out of 0.65671 or yesterday's high versus yesterday's low might determine the direction, basically implying that a breakout above here or below here would potentially indicate a trade, but trading within here doesn't make sense since you're trading within a range and the market is not making very strong directional movements. So as for the favorite asset, gold, it's making quite an impressive recovery. So remember, in our analysis last time, we were expecting that gold would make a major swing here and drop all the way to the lower trend line, but it seems to have found a major support around this area here, and since then bounced and is now moving higher. So seeing the strong recovery in gold happening here, there's a likelihood that this might be extended later in the session, especially depending on the outcome of the JOLTS job openings report. So this might be a likely target if we see an explosive momentum where gold potentially breaks the previous high. The previous high is not very far off. This is 2400. So if we happen to break or breach above 2400, then the next target is all the way up at 2431. So also the reverse is also true. We could be seeing gold dropping to previous lows. The previous low is no longer here. We are looking at all the way down at around 2355, and this might be fueled by the JOLTS job openings data, where, as we have mentioned, weak JOLTS job openings would mean a weaker dollar, which means gold continues the rally to 2431. But then if we see a surprisingly strong report, then the dollar could strengthen and we see a drop to 2355. So US equity indices have not been left out. We are seeing a strong bounce from a major trend line that extends all the way back to the 12th of October. And this is last year. So having seen a big sell-off and a correction happening in SP 500, it eventually landed on this trend line. And since then, we have seen a bounce and the market seems to be making some good recovery. So in this case, the key level test is whether the market breaks this resistance, which has been holding for the last 3 days. So for 3 consecutive days, the market has been unable to break this area. And there's that potential that as we enter the New York session, the market could potentially break here and move higher. So if we see a break above this point here, then the next target is all the way up. That is 5580. So we could be seeing an acceleration of price towards this area here as the SP 500 recovers. So NASDAQ also doing the same stuff, making a recovery. And as you can see, we have a major trend line here, which implies that the market, having bounced here, could potentially rally and get to this area and potentially interact with this previous support. So the Dow is also making a strong recovery. So from the forward chart, this is how it looks like. So the big sell-off that happened last week managed to land on this particular trend line. And all we are seeing this week is some form of recovery. Though yesterday there was some form of sell-off, today the market is attempting to push higher. So we could be seeing some nice acceleration to this resistance and potentially breaking and going for the previous high, which is all the way up. So oil having met a head and shoulder pattern. I remember we discovered this about 3 weeks ago. We identified potential breaking point, bouncing point from this upper trend line, and eventually we had the breakout, an acceleration downwards. Then from here, we projected that when the market breaks, now we are headed all the way down, and this train seems unstoppable, which means that there's a likelihood that oil extends the losses and keeps pushing until we get to this major support area around $76.753 per barrel. So Bitcoin made a recovery and managed to hit a high of over $70,000. So after hitting this high, which was yesterday, it made some pullback and now it's really struggling around this area here. So we'll be watching closely to see if there's signs or evidence of the market finding some ground and making a bounce. So as for today's price action, it seems more of a consolidation, more or less like a sideways momentum. So unless something major happens, we don't have a lot of activity here. So that's it for the day. There's also European equity indices. As you can see, the Spanish IBEX is making a recovery. So it seems like all market indices are making recoveries this week. So after bouncing from this support area, you can see market attempting to move higher. And for the Euro stocks, it's the same thing, making a recovery. The UK 100 managed to make a very strong bounce here, broke the upper trend line, and the upper trend line was here. Just highlight this. So this was the upper trend line overall. So there was a clean break, market pulled back. We should be expecting to see some form of continuation this week. So the French 40 index, after hitting a new low here, in what looked like a strong breakout, already got back into the pattern, meaning that there's a good chance we see more recovery. And this is the same thing for the German DAX. So thank you, everyone. Thank you for your time. I'll be checking to see if there's any question before we end the session. Hello, J Squad, and thank you for joining. So I can see one question. Still on the stocks, there has been very good earnings reports for most of the companies reporting today. yet the volatility is reduced and mostly bearish. What is leading to this? So the market was basically experiencing a correction, and for you to turn from a correction back to bullish momentum, investors will mostly require more evidence. So for instance, some of the top companies missed earnings, like United Health Group, one of the biggest retail chains in the US, also missed earnings. That is Walmart. And now we are seeing tech being the savior yet again. So yes, investors are weighing these different earnings. We should be getting a good percentage of SP 500 stocks by the end of the week, and that will give the investors a stronger decision. However, overall, with the potential of the Fed cutting interest rates on the September meeting, this should be bullish for equities. So we should be seeing equities make a strong recovery from this price level. Seeing one last comment from J Squad. Squeezing na kuona kwa TV sana nafurahia. Thank you. Just trying my best. So today on the Euro news that you've heard in the course, will Euro strengthen or weaken? So as I mentioned, it's looking more or less like mixed data. So with mixed data, it means that now we compare the Euro with another currency, majorly the US dollar, which will be having news at 5 p.m. So as we have discussed with the JOLTS job openings, there's two likely outcomes of whether the openings are strengthening or weakening, with more likelihood that they are weakening, and if they weaken, they also weaken the dollar. So you could be seeing the Euro making some recovery against the dollar, and that's the likely outcome based on my analysis. So looking at the unpredictable trends by JPY pairs, could there be unforeseen interventions by BOJ? Yes, we had an intervention happening some time back, and that intervention didn't last for long, but it was quite powerful to reverse the trend. So when we saw this happening, this big move here, this was likely an intervention followed by this. And if you go to a bigger time frame, in this case, the 4-hour chart, so this was likely an intervention, another intervention, but then the market continued naturally down. But then what we are seeing here is the market making a major bounce from a major support area. So notice that the first intervention that we saw this year dropped the USD JPY to this price level. So this was the third intervention, and it led to the same price action level. And it seems like the market is not taking it, and it's going against that intervention. So that's why I drew this trend line here to show you the likely breakout point. The breakout point was right here about 3 hours ago, implying that the market is having more pressure to the upside than downside. So what we are seeing here is the dollar making an impressive recovery against the yen. And if we see the market now breaking above 155.358, then the other direction should be 157.587. So we have seen this trend happen over and over again. BOJ intervenes, market recovers. BOJ intervenes, market recovers, and in this case, it's no different as policy still remains the same. Rates are expected to be maintained at 0.1% by the Bank of Japan. So that's it. I'm not seeing any other question. Thank you very much, guys. Thank you for your time. And I hope to see you on the next session. Remember to watch the latest episode of the Bullish Banter podcast. We also have new content on the Financially Incorrect podcast. And if you'd like to register for an account, check the link in the description below. If you're watching from X, then go to the FX Pesa Twitter handle. Then you'll find that link there. So if you're just a beginner, go to YouTube and then search for the Novice to Pro series, which is a 10-episode course designed to help you transition from a beginner to a pro-level trader. So thank you, guys. I hope to be seeing you soon on the next episode, which personally I'll be handling on Thursday. We'll be having, another course that is a Novice to Pro series, now available in Swahili. So if you prefer consuming content in Swahili, then you will have that Novice to Pro available still on the FX Pesa YouTube. So thank you, guys, and I hope to see you next on the next session. Remember to like, share, and subscribe, and that will be very helpful to us as we're able to reach more traders.